What is happening, traders? Today we're going to be going over stock ticker AMC, baby, as well as the broader market. So if you guys are interested in that, make sure to stay the full length of the freaking video, hit the like button, and subscribe, I guess. We're going to be getting into the structure on AMC, the cup and handle formation that everyone has been talking about on the stock, as well as the volume profile, as well as, is this thing still freaking valid? What levels am I watching for on the cup and handle? Let's get straight into it, guys, because there is no time to wait. This is the only time in AMC's history or in channel history that you're ever going to see me use a fib retracement, and I use it because a cup and handle is valid until 50% of the cup has been retraced. Now, this is absolutely critical to seeing whether or not that has occurred, right? So I'm saying taking the bottom to the top here, and I want to see the 0.5. The 0.5 specifically is a 50% retracement from this uptrend, and what you've seen is you're right around that 0.5. So anything, in my opinion, below 231, and you're invalidating that cup and handle formation. Doesn't mean you're particularly bearish by any means. You're still bullish, but would invalidate this beautiful, right, cup and handy that we've been talking about on AMC for quite some time, right? This theoretical, absolutely magnificent profit target of around $4.30 to $4 on AMC, which just looks so freaking symmetrical, so perfect to be incorrect. Additionally, guys, this is going to be probably one of the most important videos in our channel's history because we have CPI coming out tomorrow, and I wanted to gauge what that's going to look like in just 1 second. So make sure to stay with me, guys. Lock in, right, as the Gen Zers say. So look at the last couple days in volume, right? I want you to pay the closest attention you ever have, right? Pay so close attention at the 14 million shares traded, guys. Towards the end of the handle, specifically in the cup and handle itself, you should expect to see volume dry up, especially sellers volume, guys. What have you seen along this entire, now down 21.47% slide? You've seen nothing but drying, deteriorating, disgusting freaking volume. And from that, you've retested your all-time downtrend, right? You've done it a couple different days in a row. You tagged it here, you tagged it here, and you're still remaining above it here, traders. It's bullish. And in doing so, only tagging 14.73 million shares, guys, you have not done remotely close to that low in volume throughout this entire stretch of price here, right? And so what's so encouraging to me is seeing that this freaking pattern has only seen the volume of 14 million, not even, right? This was 16 million right before you ran, right? At the end of the consolidation, traders, is oftentimes when you see the bearish volume dry up the most, or at least before a big move up or down. So I'm watching for that very closely. You can see the only time you've done below the volume that you had today was also right here, right? Very coincidental that the market makers are drying up liquidity right before they frickin' send this thing. So I'm watching very closely the volume going into CPI tomorrow. It's going to be absolutely critical where you are able to close and what the CPI data comes out as, right? Kevin Walsh has been relatively unbiased to the markets, right? So I expect that to continue here with inflation kind of being choppy. But above all, guys, you're actually retesting your 50 line on the RSI on the daily freaking time frame. Very, very important that you bounce here, because if you don't, right, your last bounce was right here before earnings, before you saw a 26% rip in 1 day. Now bouncing off of this, what was that, 786 on the retracements, even though it's beforehand, right? But bouncing at that level is absolutely crucial because it came with the 50 line, and you can see the rejection here in November of 2025. You could see it here in October of 2025. AMC loves to freaking rebound off of this 50 line. It is what establishes a bullish or bearish trend oftentimes. You can see another example here in May of 2026. You bounce off the 50 line, you rally 23%, and then you rejected that, inevitably came back above it, right? But what's so important here on the micro is you have a lot of different invalidation points, right? You could fall below the 50 line. That would not be good, right? That would probably spell a lower low on the RSI to oversold and a more prolonged chop down to this uptrend, right? Very, very possible on AMC. Of course, no one wants to see it, but in doing so, traders, you fill this gap at 205 and you also tag something very important to AMC in my eyes, right? Where is the correct chart? There we are. On the daily time frame, traders, you have your 200-day EMA literally hovering right on top of that gap. I would not be surprised whatsoever to see AMC dip into the 200-day EMA at the worst case scenario, right? Let's say we get hit with some surprise news in CPI. Let's say we get hit with a breakdown and volume ramps up for the bears. Very, very possible you fill the gap and hit the 200-day EMA. But what will turn the tides for AMC is if you can see this deep retracement bounce hard, man. If you bounce hard off of this golden cross retest, that inevitably, in my eyes, is going to send this thing absolutely sky high. And I'm very excited for that moment, right? Because that gives you the opportunity to not only take advantage of the volatility to the downside, right? But to flip long on this 200-day EMA. So what I'm watching here on the weekly time frame, traders, is a low volume week, but a retest of 228, right? On the 9-day EMA, you have not touched a retest on this thing since all the way back in January of 2021, right? You could see just how you're hovering above it here on a low volume candle on the weekly. Look at what you did back in 2021, right? Look at how you break above it, you force the cross on the 9 through the 50, and then you come all the way back down, you retest it, and you ride every single weekly candle closing above it until you squeeze, right? Back in June. That is something that I'm watching for here, and the similarities are pretty striking. So whether or not you bounce in that 231 or 229 area is to be seen. But regardless, traders, I am so freaking excited for what IWM is about to freaking do on these charts, because IWM is not only broken out of our falling wedge that we spoke about, not only invalidated any bearish divergence, but has also, traders, formed this bullish flag pennant on the daily time frame ahead of CPI. Now, it seems too good to be true. You have a daily gap currently sitting at 296.66. But if this thing breaks, traders, we're looking at a $318 IWM while AMC remains sideways, right? And so this is what gets me jacked for a potential turnaround here on AMC is regardless if you go to 205 or 231, I think there's a strong possibility that you may have almost put in your bottom. I don't want to say that you've put it in yet, because typically when you put in a candle like this, and this is typically a bearish candle, but albeit I'll mark the last couple candles like this, right? Shooting star candle there. Where's another good example? This was a shooting star candle, wasn't it? Yes, it was. Okay. So actually this might be reverse MOAS for AMC. Shooting star, shooting star. Let's see. That's a shooting star. That's, oh my God. This is comical. So these are all shooting star candles. Typically what happens in the technical analysis world is if you print a shooting star candle, you're going to go lower, right? Close at the lows and you go lower has always been my analogy for AMC. But we're just going to have to wait and see, guys. I think tomorrow is going to be an absolutely wickedly volatile day and probably one of the most important trading days in AMC's history as we make this run up, right? There's very, very few days where the price of the stock matters more to the destination of where it can go. And tomorrow is one of those days, right? Breakdown, you're going down to $202 flat, potentially 205 to that gap fill, and the 200-day EMA break up, and you're going to freaking 450, right? So there's so many different possibilities here. Typically, this shooting star candle is bearish, but you can look at the technical correlation the last 2 times this has happened, especially on low volume, showing that shorts and bears have failed to push this down to any significant strength, and that bulls can just step right back in tomorrow without hesitation and send this thing outside of its low volume consolidative cup to the freaking moon, right? So that's exciting. And we're watching that closely off of a potential retest of this 50 line on the RSI. Let's see. On the 4-hour chart, we remain inside of that handle or that wedge formation on AMC. We're very, very close, and you flirted with it a couple different times about crossing this 4-hour MACD. You failed to do it right here when you saw that pretty nasty dump 5% on low volume, but you're coming to the end of what would be this potential falling wedge on Webull in overnight trading. So you really only have until... let's see how long you can stretch this thing out. Probably only until the 13th, right? Only until Thursday trading. And truthfully, traders, I think this thing is going to break tomorrow. So maybe a dip lower and then, right, Band-Aid rip. And once this downwards pressure breaks, it's very likely, in my opinion, that you see this thing recover at least, right, to the highs at 270, maybe even 286 to 290, right? But that's going to really determine on the volume, right? The volume that comes in, because nothing has been more true than AMC on low volume, especially for back-to-back days, traders make some explosive, stupid moves, right? We called the same thing back here in this consolidative channel. We did it for members only. And we said, all right, 1, 2, 3, 4 days of consolidative low volume on dojis, right? Inverted bullish hammer candles. You're closing above the 50-day EMA. There's a very high likelihood, in my opinion, that you break out here, and you did exactly that, right? That was going into earnings. You broke out, retested, and then your earnings move was 26%. So sayonara. I think that's what we got for AMC. The cup and handle is still valid, like we said. I'm watching closely to see whether or not it wants to hold. Is going to be another story. So 231 is that level to watch on AMC. Big day tomorrow. Speaking of the Fed, guys, I asked Grok, I asked AI, what are the odds that CPI comes back positive tomorrow? And it gave me a result of high, around 70%, according to prediction markets, with economists' consensus pointing towards a modest positive month-over-month print for CPI. It comes out tomorrow morning, 8:30. For me, it's 7:30 a.m. And you should expect to see this volatility come within the pre-market, right? June 2026, prior print headline fell 0.4. And if we're looking at where we were in June, I believe gas was relatively high, relatively elevated still, even in June. So what I think is going to be interesting here is, even though the gas is high, can they kind of fudge the numbers to make this positive, right? Because your forecast is just a slight increase in CPI. And if it is so, then you can remain dovish on the Fed, right? They may cut rates still this year, but we're going to have to see. I do not believe they're going to raise rates, but that depends heavily on what this comes back as. Going further into the IWM print here, you have a little bit of this ascending level of support, descending level of resistance, right? You're going to get this conclusion, just like AMC, probably tomorrow. This pinnacle of this wedge ends 8:13, which just so happens to be Thursday as well. But I'm pretty inclined to think that you're going to see this thing break down to the gap, 291 on the 4-hour chart, which is interesting. Interesting that there's a difference there. Break down to the gap or break up to the profit target, right? So it's either doom or gloom with the Fed coming around the corner, and I'm genuinely pretty curious to see, because you have a lot of stocks like GameStop, right, that are absolutely already oversold, and this may be their moment to find that rally, right? Find the rally into this gap fill on the daily time frame of about, what is the official gap fill? 2166, right? 2166 is your mark to recover into, to potentially find a pretty sizable gain on GameStop. Where you currently are, $18 is a 15% rally on GME, and it's a little overdue, okay? Because you've already made a couple different touches of bullish divergence on the daily time frame, in which you've made multiple higher lows, but this thing remains stagnant, remains flat with a big fat, you know what it is, double bottom, the George W. 1855 and 1858 traders, making a slightly higher low and a bullish hammer candle today. Pretty much flat in overnight trading, but pretty fascinating to see even after this gnarly candle down. If you can hold this green and flip green tomorrow, that's a morning star formation, depending on how green you are, right? So I'm liking the bottom potential here for GME. If you can see CPI posted green, you could potentially print this morning star, maybe chop a little bit more around this 19 before crossing the daily 9 EMA, right? We haven't had that posted on here, but we're going to check it out. I'm on TradingView. That's why. Give me GME. Okay. Yeah, your 9-day EMA trading right around 1957 is going to be absolutely crucial to get back above. Otherwise, you're just going to reject it. Bear flag, and then this thing is bon voyage, right? Another leg down would be horrendous for GME. It is not out of the picture. It is absolutely possible. As you see volume continue to capitulate here, you need some kind of clarity on this eBay deal from Ryan Cohen to see this thing rally in a meaningful way, right? You could dead cat bounce into the gap fill and then either reject this previous resistance or reject this previous support, right? You could totally do that. Could totally, oh my God, we're going higher. We're going to fill the gap. Psych, right? You could totally do something like that. But I need to see from GME clarity regarding the eBay situation. I think there's a little bit of turmoil building on the indecision and the lack of direction. Is that the word I'm looking for? Guidance. The lack of guidance is what I'm looking for. So very possible on GME. I don't think it's likely. I think it's more likely you kind of chop around here or get that morning star and fill above this 9-day EMA to go fill that gap. But we'll see, right? We'll see. CPI coming out tomorrow. IWM looks absolutely banging. You got GME potentially getting back above 19. We'll see tomorrow. And AMC in its biggest day yet. Seeing, will this handle break out, or will you invalidate the handle from that full Fibonacci retracement of the 0.5, right? You're only 8 cents away. So tomorrow is going to be one of the biggest days in AMC's history. Until next time, guys, God bless each and every single one of you guys. Hope you're having a stand-up freaking night. And as always, guys, the best is yet to come. Subscribe, like, do the whole thing, and I'll see you in the next video. Peace. Woo.